sure some of you know this, and blogs on personal finance and small businesses. She holds a master's in development finance from the University of Stellenbosch Business School, a banking honors degree from NUST, and is a certified business advisor with Growthwill, as well as an International Business Innovation Association certified hub manager. Wow, that's a lot of qualifications. So allow me to take this time. She's going to be our first presenter. For anyone who's got questions, you can utilize the chat platform, but we will have a question and answer after her presentation. So Kudzi, over to you.
Thank you very much, Mrs. Bepe. I want to start by thanking the Zimbabwe Stock Exchange for allowing me this opportunity to take the next 15 to 20 minutes at most, just to talk you through how ordinary people like you and I can make money on the ZSE, can make money on the Zimbabwe Stock Exchange. Like has already been said, I am a personal finance enthusiast. I am a personal finance trainer, and I started buying shares on the Zimbabwe Stock Exchange as early as 2001. I believe that the first listing that I participated in was the one for First Mutual. It's not First Mutual, Fidelity, and that's many, many years ago, close to about 20 years ago. I worked for a stockbroking firm 2003 when I was doing my internship while I was still a student at NUST. And let me say that is the year that I started buying shares. It's been a very interesting journey, but I want to assure everybody who is listening this morning that any one of us has the capacity and the potential to make money on the Zimbabwe Stock Exchange. And I know someone will come and talk about this, but let me say that we have a really great opportunity through ZSE Direct, and I hope as many of us will take advantage of it. But someone will talk to it. I will just point to it somewhere towards the end. I'm not sure whether we will be recording or not, but just in case we are and someone has forgotten, please do remember that to record. I'm not too sure, I can't tell from now. However,
I can confirm it is recording, Kudzi.
Okay, fantastic. That way I can behave myself. Now that we are recording, let me formally thank all of you for coming through. I'm going to talk you through some quick slides on how you can make money on the Zimbabwe Stock Exchange. So, as technology would have it, okay, now it's moving. I want to start by saying that when it comes to personal finance, we are talking about how you yourself as an individual can make money and how you can manage money. At the end of the day, managing money will always be greater or more important than making money. Because if you make lots of money, but you don't manage it well, you will have a problem. So I thought I should just put that out there. When we talk about investing in shares, this is one way you can save. This is another way you can make money. And it's important that at the back of your mind, you then say to yourself, listen, whatever I'm going to make on the Zimbabwe Stock Exchange, I want to make sure that I manage well. And we always say that it is critical that as you begin to build on a foundation of personal finance, 3 important things are the things that we pursue in life. Number 1 is whatever income you generate, try and spend less in your life, try and make more money, and then make sure that you use the money you already have to make more money, which we call investing. So when we speak about personal finance, because we do not have a lot of time to deep dive, I want you to know that it is important as an individual that you get really good at all 3 things: managing your spending, managing your earning, or making more from the money you already have, and then of course, investing. I will come back to these very basic principles of money as I begin to build the case towards why the Zimbabwe Stock Exchange is a good idea and a good platform for you to make money. So because of the kind of connection I'm using right now, I won't be able to flip to video. I hope you will believe me when you hear that it is me who's speaking. It's not a cat or a dog, but just in case you want to see my face, some of the things I do have already been spoken about. Just to give you a little bit more confidence, I'm also the treasurer of AfriLab, which is the biggest African institution of innovation spaces, over 225 of them in over 47 countries, serving over 1 million entrepreneurs, and we have a budget of over 3.5 million euro. So when we talk about these things, it's not because we don't handle big monies elsewhere. I believe that it is important for us to understand the opportunity we have by just being in Zimbabwe at a time like this. So I do handle monies in other places as treasurer. The Internet Society of Zimbabwe is one place, but more importantly, I handle my own personal finance, and I also handle and help a few other people as their personal financial advisor. Now, I want to talk very shortly in the next few minutes about saving and investing. And I'm so glad to have this platform and opportunity because I can speak to it from a Zimbabwean context. As we proceed, please feel free, like Mrs. Pepe said, to just pump in any questions into the chat box and we will treat them as soon as I am done. Now, I've started off with a bag because I know that when we speak in some of our casual language, you know, ane bag or someone has bag, ane mari, they have money. So saving and investing is very important. Now, I always like to share this first picture and I hope you can see it. Mrs. Pepe, please confirm that you can see my little boy with lots of money.
Yes, we can see him.
That's the most important slide today. Fantastic. Now, that picture, I always use it because it's a trigger for many Zimbabweans. Depending on how old you are, I'm 38 myself. I'm old enough to have participated in the stock exchange. I was very conscious when 23 years ago, on the 14th of November 1997, the Zimbabwe dollar crashed. And there were many different cycles of money and supposed losing of savings and investments in the many cycles that occurred. I also lost some money. I don't really enjoy calling myself a victim, but let me say I did lose some money in all of the cycles that happened in this particular past years. And so I very much sympathize and empathize with people who say, you don't save in Zimbabwe, that one it can't. You know, it's like 7 minus 20 when we were in grade 3. The answer was it can't. It's only when we went to Form 1, when we were 13, that we realized that there's a number line and actually it can, it's minus something. So that picture, I use it really to trigger because that is a boy who had been sent to buy bread in the year 2008. If you look very close, you can tell that behind him, he's literally just crossed paths with an adult person who could potentially have stolen that money from him. But because that money was only enough to buy a loaf of bread, no one was tempted to steal from that young boy. He's happy. He's holding his currency of that time. And that's how bad things were. And so many cycles have occurred so far. And many of us may not be very encouraged to save or to invest in this environment. But let me say that the basics of money, friends, do not go away. It does not respect the fact that we are in Zimbabwe. In fact, one of the people I'm a financial advisor for is a personal friend who is my age, who works in Iraq, or Iraq, as Zimbabweans prefer to call it. And so I would dare say that that is a place that has much, much less stability, all things equal, than what Zimbabwe may look like presently. And yet, even in places like that, the basics of money, I always say, don't go away. No matter how bad things are or how sad things seem or how bad the economy seems, the principles of money don't go away. We will always make money. We will need to invest. We will need to save. We will need to spend. And so in environments where even it seems that things are pretty tough, there are always opportunity. For those of you that follow markets, and I highly encourage that you follow people who are great at these things, follow handles on Twitter, on Facebook, or even websites. There's one which speaks of what is called the African financial markets. You will find that consistently Zimbabwe has been leading in terms of returns on our stock exchange. Only trailed, I believe, by Rwanda, which was giving a year-to-date, I think at the last time I checked, of about 9% per annum. Our market is anything, depending on the index or indice you are using, anything above 400, 500 to 600%. That is a phenomenal return by any world standard. Now, just to set the foundation before I then go on to why and how you can make money, I want to say we cannot live a life where we consume everything we make. And it doesn't matter how much you make. If you make $100, you eat all of it. That's it. So saving by itself is basically based on delayed gratification. It's the basis, and I would say the foundation of growing wealth. So you've got to make money. And from the money you make, you've got to set aside something. And from what you set aside, which is what you call saving, you then do the next action, which is investing, which is the real action towards wealth building. Now, I remember having a very lively conversation, I don't want to call it an argument, with someone on Twitter, because you see on Twitter, everyone wants to be right, where someone was saying, no, you can't say that saving is the basis of growing wealth. It's investing. But my question is this: when you say you are investing, where is the money that you're investing coming from? So I personally prefer not to separate saving and investing. I tend to present on them together. We save with the intention to invest. So you're simply saying, listen, I could have spent this money today. I have $100. I could have spent all of it. It is I who chooses that I'll set aside $10. That setting aside is saving. And then the next action is to take that $10 and put it in a place where that money can make more money. That is what we call investing. So in order for you to save, you need to do this simple thing, remodel your equation. Most people live this way. They have income, and then they first spend on many things, and then they hope, emphasis on hope, to save. But the key or the real, formula should be that income, whatever it is you make, take away savings first, and then you live on what remains. This can be done at any level. I've heard people argue, hey, I only make $50, I only make $150. We have successfully been able to work with people who, on whatever level of income, and I dare say that anyone who's in this class probably makes more than $50 a month. As long as you have some form of consistent income, you are better off than most Zimbabweans, because you can actually begin to live this formula where you say to yourself, whenever I get money, I'll take away something, and then I will put that towards savings, and those savings become investments, and I only live on the rest, which is expenses. So let me say as well that savings require consistency. Over the long period of time, people who make it work, whether it's on the Zimbabwe Stock Exchange, investing or saving, or I would dare say on any other thing, it's because they are consistent. The person who puts in 500 Zimbabwe dollars every month, which is give or take loosely $5, and buys into a certain counter or buys into certain counters for the next 10 years, is going to be by far better off than the person who makes $1,000 every month and occasionally saves, I save $1 a year, $2 there, $5 on another year when I feel like it. So I want to say that there are many ways to save and invest that suit different individuals. I'm not going to deep dive on those today, but let me just say investments are one way of generating income. For those that may have come across Robert Kiyosaki's Rich Cash Flow Quadrant, I highly encourage that you read that book, The Cash Flow Quadrant. He basically speaks of 4 ways of making money. You are employed, you have a salary. You are self-employed, you make money from work that you do by yourself. You are in business, which means you have a system that makes money for you. Or last but not least, you are investing. And investing is what we are deep diving on today, where we are basically saying, from whatever money you make, from a salary, from self-employment, from money you get as remittances, whatever the source, it is an action you take to put that money where it may make more money for you. So I'm drawing towards a close. I want to say these few important things. If you do not have a portfolio, which basically means a mix of investments, now is the time to begin to build an investment portfolio. I always use this example. I liken investments to a tree. Listen, a tree has the potential to give you shade. It can give you fruit. If you take some of the leaves of certain trees, they can give you medicine. But a tree, and many times we forget this, gives you oxygen. And so if you and I want to be sure that in the future, we have something that protects us, something that helps us to live, which is oxygen, something that gives us shade, which is comfort, something that can be able to heal us or to treat us when we are ill, which is money or the medicinal properties, something that can feed us, which is fruit. I want to say, if you do not have a tree, if you do not have any kind of investments, let me say that the best time to have had one or to have planted a tree was 20 years ago, as the Chinese say. But the next best time is now. So plant a tree today, start building a portfolio today of investments so that in the future, you have something to fall back on. I want to also say that this is very important. Asset allocation is key. Now, if you're going to build a portfolio of investments, you want to choose certain types of investments. You want to think about the time you have. If you're 20, you probably have more time than someone who's 60, all things being equal. You want to be sure for what purpose you are investing. So people may invest in the short term, which is 1 to 3 years, in the medium term, which is 3 to 5 years, in the long term, any period above 5 years. And like I said, the key elements for everyone to consider is, what is my age? How much time do I have? What is my risk inclination? How afraid am I of certain things? And what kind of a return am I looking for? I want to say that the Zimbabwe Stock Exchange, the stock market, suits every age. In terms of risk inclination, again, the stock market saves everyone because there are counters or companies you can buy to. Those that fear risk, you go into the more solid, usual companies that behave in ways that you understand. Those that are more risk averse or that are more risk inclined, that don't fear too much, you can jump into certain counters that no one believes in yet, in the hope that they will do great things. And of course, all of us are looking for great returns. But after all has been said and done, we all share the same sentiment in investing. The idea is, if I take $1 today, or let me say $2, because $2 buys you 2 kgs of sugar. If I take $2 from my money every month going forward for the rest of my life, I want to be sure that that $2 I take and I don't buy sugar today, and I put it towards an investment, that $2 must make more money such that by the time I get back that money plus whatever it has made, I can buy sugar, not just one, but maybe 1.5 or 2 sugars or 3. I'm basically giving you a simple explanation of something called inflation. We all want to beat inflation, and you must know this. In the long run, in as much as there are many different types of investments, the stock market will always outperform every other market. Now in Zimbabwe, we have different other markets. We're not here to talk about them. There's property where you make money from rental, capital appreciation. You can use it as security. There are what are called fixed income investments where you put money in financial institutions, you leave it with them. They give you at the moment at best 6.5% per annum on $1. Against inflation, which is anything ranging from 383 from Professor Hanks through to about 400 or so, or 600 at official, whatever rate or percentage you choose to select. Certainly, fixed income investments will not give you the best return. Property right now in Zimbabwe, the best types of returns are on industrial property. They're looking at about 15% per annum. Again, that is not as good as what you get on the stock exchange. There are many alternative investments like venture capital, biological assets like Chengeta Mombe, acquiring livestock, microfinance through Maround, where you get returns of maybe 5-10% per month. Foreign currency investments, commodities, art. People put money in cryptocurrency as well. But I will tell you this, after all has been said and done, in the long run, none of them performs as well as a stock market would do. So the stock market, you may hear people using things like shares. That's one way of describing it. Some may go for the more technical equities. Some just call it stocks. How do we benefit from these? Number one, capital appreciation. I buy a share in MedTech today. It's at 7.5 cents. And then tomorrow, that same share goes up to 10 cents per share. I have made 2.5 cents per share. That's not bad at all. A return of 25%. And the beauty of the stock market is this can happen overnight. This can happen in a week. This could potentially happen in a month. Of course, it may also happen over 6 months. But capital appreciation basically says, I put in $1, and then once I own shares in a certain company, I may make more money as the price of those shares goes up. The second way you can also potentially make money is through dividends. And we highly encourage that those, especially that are risk averse, who are looking to invest in the long term, put your money in those types of shares or counters or companies that are in the habit and a system dividends. So if I was holding shares in Delta at a certain period traded, and then they say, listen, we've done well, we want to share our money or profits with those of you who invested in us. For every share you are holding, here is 2 cents or here is 5 cents. That is additional benefit over and above the capital appreciation. So let me quickly skim through these things, because I know some of you are just coming in and you've never really traded on the Zimbabwe Stock Exchange, so that quickly I cross over to treating questions in the last 5 or so minutes. Now, what is the stock market? It's basically a market for buying and selling shares. Musika, people will be selling tomatoes, onions. Think of those, carrots. Think of those as different types of companies. Each of them has a different price. The only difference is that when you come to the Zimbabwe Stock Exchange, there are different companies and each of them have different shares, and you and I can all participate by buying and selling into those shares. But listen, because there are so many companies, over 50 of them, all right, just under 60 on the Zimbabwe Stock Exchange, we can't all go to the market. So we go through people called stockbrokers who then represent what we want to do, to either buy or to sell. So when you have stocks or equities or shares, that means you own a part of a larger company. You are now called a shareholder. A person who owns property is called a landlord, isn't it? Or a property holder. When you own shares in a certain company, you are an owner, you are a shareholder of a large company. So your benefit, like we said, comes from the movements in the prices or a dividend that can be declared. And what moves those prices, some will ask? Information is what moves the prices. So daily, the Zimbabwe Stock Exchange, Monday to Friday, is trading from the mornings from 9:30 to about 12 o'clock. And it will react, each company, different companies will react to different things. News around a sector, news, for example, policy. We know that government recently launched another national strategy after the end of the TSP. Depending on how the market thinks that may affect their sector, then shares can either go up, please note, they can equally go down. You see, but the beauty of it is you still hold on to your shares. If you have 1,000 shares, you don't lose the fact that you had 1,000 shares. What may change is just the price. And so if you're going to be a stock market participant as a retail investor, you must befriend news. Why the stock market, like I already said, always outperforms every other market in the long run. And also the beauty, like I said, if you want to build a portfolio, you can be able to use the stock market for short-term investments, for medium-term investments, but also for long-term investments. For those of you who are still young like me, who say, listen, I want just to get in, which I will need maybe 5 months down the line. I get in instead of just putting that money into Forex, which may not move much. In fact, you can actually lose value. You know, my mother buys meds for BP. Some meds she used to buy for $9 last year in US dollars are now 10. So there's actually US dollar inflation. But perhaps if I have money now and I put that money aside into the stock market, I could make a gain of 50%. It's very possible. So you can make money in the short term, you can make money in the medium term, you can make money in the long term. Shares, this many people forget about, can be used as security. If I have shares in, say, I'll use Delta just as an example because it's easy for most of us to know, because all of us drink, isn't it? Some drink more alcoholic things, some of us drink sweeter things, but we all drink, we even all drink water. If you have 10,000 shares in Delta and closing price was about, say, 22 cents yesterday, that means you have about 2,200, if my mathematics is not wrong, in terms of value. If I want to borrow, all things being equal, I can literally go to a bank and say, can you lend me $1,000? Here is my security in the form of shares. They can be part of a portfolio that has other things. So you can actually mix it with your fixed income investments, with your property investments, even with stocks from other territories like the Johannesburg Stock Exchange or the Zambian Stock Exchange or wherever else you choose. So I want to say, in conclusion, that all of us can learn how to work on the stock market. This is my last slide. And I want you to remember these 4 gates. Any one of us can begin to participate on the stock market as soon as today, straight after this session. In fact, if you're quick enough, because we'll finish at 11:30 or so, you can literally be able to, jump onto the stock market if you already have a ZSE direct account. But for those that do not, you can literally open it today, and by next week, all things being in order, and I know someone will talk to it in greater detail, you can then open an account, fund for only 500 Zimbabwe dollars, which is less than what many of you spend for lunch or for hair in a month. Make it a habit. I personally have made it a habit to buy something every week, to buy something every month. You accumulate. The beauty with shares is that these are things you can actually leave to your children. Most of us may not have the opportunity easily to buy land or to buy property, but all of us can immediately begin to participate and build up portfolios and begin to strengthen our own investments and our personal finance on ZSE Direct. So your first gate is get an account. After you get an account, don't sleep on that account. I've seen people, posing in our WhatsApp groups and Facebook and actually I have a stockbroking account. That's good. It's one step, but you must go ahead and do a second thing. Start to trade. The third gate is get learning, get information. Get into groups. I know Kudzi Sharara has a number of groups. I'm running a number of groups myself. Follow the ZSE on Twitter and other platforms they are on. Go to their YouTube. Listen to all of those videos. Those things are enough, guys. Many people, Kudzi, please help us. Me and Kudzi and the other Kudzi. But how do I start? Those things are there for you online, guys. Just go on ZSE, a platform on YouTube. Listen to all of those things. You are good to go. And once you've gotten an account, you get started, you get learning. The only other thing that is left is for it to end for you in wealth. Get wealthy. So learn that the market will go up and down. There is no other way. This is the last thing I'll say. I always liken getting into shares or into the stock market like riding a bicycle. You can buy a book, 101 ways on how to ride a bicycle. Buy yourself a 5-speed rally or even BMX bike, in bright red, which does all sorts of interesting things. Until you actually open up that package, get onto that bike, begin to ride. Even if you watch all of the YouTube videos, it does not help you. Pindai mu market imomo. Murakashe musika. You learn. Your school fees is paid when you sometimes make bad choices. Sometimes you make bad timing. You learn from others. You ask questions. You get in, you get out. Over time, you will find that you will become a sophisticated investor. So I'll say this not to be cocky. I have 2 master's degrees. I'm working towards getting a 3rd one, probably a PhD. Those things don't actually work for the market. With the market, you only learn by doing. So my encouragement to all of you, get an account, get started, get learning, get wealthy, and indeed, let us build ourselves portfolios so that we have something to leave our children. If you yourself inherited nothing, and except for poverty, let the cycle of poverty end with you. Let the cycle of prosperity begin from you. So thank you very much for your attention. I'm going to stop here and treat any questions. I'm going to stop sharing and I will receive some questions now.
Thanks so much, Kuzi, for that insightful presentation. I'm sure participants learned a lot from your presentation. I'm just going through the chats to see if there's anything that is directed to you. There was someone who talked about different WhatsApp groups. So someone was asking if there's perhaps a WhatsApp group of stock market investors sharing insights and experiences. Maybe you can then share the link in the chat group as well. If there's anyone who's got a direct question, please feel free to unmute your mic whilst I also go through the chat questions.
Hi, Tapio.
Hi, Eno.
So there's a question, I think it's directed to Ms. Mbayo. It's saying, yeah, fine, you have talked about the ZSE performance and how it's good in the region, but are these real returns when you analyze the performance? So
I think my quick question is, my quick response to that would be, it then depends. The trick with the stock market, and my friend Kuzi always says this, is buy low and then sell high. So to be fair and to be honest, the returns are indicative of what potentially could have been gotten, right? Combining all of the different markets, different counters and their performance. Now, the trick is always to try and buy as low as possible. So it is very feasible, yes, to get real returns. The trick is, at what point do you buy? I bought Star Africa in June, at 17 cents. And then I got impatient. No, at 19 cents, I got impatient, sold it at 17.50. It's at 30 cents now. Now, I did the math around that the returns would have been real. They would have. At this point, they would have, because I calculate how much I put in dollar terms, and then I calculate what I would have gotten if I'd exited today. So the trick is to make sure that you yourself track how you are performing in terms of real returns. So it is possible, yes, to get real returns. However, if you buy high, you will lose, like any other place. If you buy something high, cheaper, you will make a loss. That's the fact of the matter. So I think that would be my quick response in that respect. I see some people have asked about WhatsApp groups. I think one of the easiest ways, if you can follow, if you go on Twitter, follow at Mari Podcast ZW. On our pinned tweet, you will see links to the many groups that we have. So Kudzi also, you can also follow Kudzi Sharara. Kudzi is running a number of stock market groups. Follow him. He will also share links. I don't know that Kudzi is in now or is going to join us. I'm sure he.
What about using C-Trade to participate out of Zimbabwe? And what about using C-Trade to participate on ZSE? What's your advice? So C-Trade is an online platform, perhaps for the benefit of others who may not be aware. It's an online platform that allows you direct access to the market. So when you go on C-Trade, it gives you an option to invest either on ZSE or on FinSec. And I would say it's really a matter of choice for you as an investor, whether you want to go through a stockbroker or through that platform. Let me hasten to say that the ZSE has also actually built its own platform as well. So in addition to C-Trade, I think when Kudzi was presenting, on the last slide, she did share the link for ZSE Direct. So we have also developed our own online platform called ZSE Direct, which if you go on Google and just type ZSE Direct, it should come out, the website. Ours is web-based, and you can also use that to access the market. So yes, C-Trade gives you access to the market, but the user experience obviously differs from one person to the other. It's only after you've gone through and seen the experience that you can say, should I go through a stockbroker, should I go through C-Trade, or should I go through ZSE Direct? But it is a legitimate trading platform. It will give you access to the ZSE. I think that's what I can say. But the choice is whether I should advise you. Probably I would say the choice is up to you, but C-Trade does give you access to the ZSE. There's also another link called ZSE Direct, which also gives you access to the ZSE. The third and traditional method is where you go through a stockbroker, where you open an account with a stockbroker, and that will also give you access to the market. So all the three are legitimate and recommended ways of investing on the stock exchange. Madam Tapio, I don't know if you've seen any other person. There's one on the efficient. Okay.
Yes,
yeah,
sorry, I just lost connection a bit, and I'm kindly asking if Clement Mboma can make me the host again. I just lost connection. There was someone who had also raised their hand, Brian Estara. If he can also just unmute his mic and ask the question to Kudzi.
Good day, members.
Yes, Brian.
My question is in relation to the new stock exchange, which is the Victoria Falls Stock Exchange. I was just asking, what is potentially the impact of us investors on the ZSE with the advent of the Victoria Falls Stock Exchange? Probably if we have companies that would decide to move to the Victoria Falls Stock Exchange, how protected are we in terms of our investments? That's my question.
All right, perhaps let me take that. Yes, so that's a fair question. He's saying what will happen to us in the case that one of the ZSE listed companies, like what perhaps Citco International did, moves over to the other side. So let me first of all say that you don't lose your shareholding by virtue of a company changing where it's listed. The share register does not change. So where you were a shareholder in Citco International on the ZSE, when it moved over to the Victoria Falls Stock Exchange, the same share register is also there on the Victoria Falls Stock Exchange. So your shareholding rights are not affected. What has changed is probably the trading platform. So I'll give an example of saying perhaps you had your tomatoes, which you were selling in Parim Sika in Zim dollars, and then council comes to say, no, we're no longer permitting, or we have decided to move this market to the Coca-Cola Seke Road there, but those that are operating at Coca-Cola Seke Road just have to trade in USD. So you still have got your box of tomatoes, which on ZSE you were able to sell in local currency. That box has since moved to the Coca-Cola side, but in the Coca-Cola side, the trading currency there is USD. So you still have got your shares, and you can still trade your shares on the VFX. The only changed circumstance is that the currency on the VFX is USD. Where you were not a shareholder, probably will say you have not been affected at all because you are not a shareholder. But you can still participate on the VFX by actually opening a trading account on the Victoria Falls Stock Exchange. So the Victoria Falls Stock Exchange is also open to all eligible investors, provided on the VFX you have got what we call free funds. So you have got your, where you have got your legitimate United States dollars that you want to invest, you can take them to the Victoria Falls Stock Exchange and actually invest. And the local currency component is the one that you can invest on the ZSE. In terms of migration of stocks to the Victoria Falls Stock Exchange, it's a decision which the companies have to make, but they obviously also have to consult shareholders. So in the case of Citco, Old Mutual and PPC, I would say they were affected by the suspension, so they were affected by a government directive, but the rest of the companies are not going to be moved in the similar manner to how Old Mutual and Citco did, or how Citco did to move to that side. the normal process would be a company that wants to move from ZSE to VFX will have to consult its shareholders through an EGM, where shareholders are given a voice to actually vote for or against that migration. So your rights as a shareholder, I would say, are quite protected, irrespective that we have got a different exchange. Your rights as a shareholder have not been compromised. There's a question perhaps for you, Kudzi. Does the efficient market hypothesis and the random walk theory hold when it comes to making profit? So I see we've got sophisticated people in the audience. Kudzi, I don't know if you want to take that, Ms. Mbayo.
Sorry, I was just fighting with my unmute button there. So I was looking at this and feeling very fascinated. I think the jury is out on that. I've seen some friends of mine who argue that they do use all sorts of analysis, your technical, your fundamentals, etc. I find Zimbabwe a very interesting place where, I'm not entirely convinced that models always work. Yeah. Let me just say this. Go to the simple basics. Buy low, sell high. Continue to take news in and let that news guide you. So if, for example, the latest document says that there will be a lot of money put into agriculture, it makes sense to buy into stocks that do agriculture. So in as much as I studied banking and finance, I have to be honest, for the Zimbabwean market, I feel, and I say this also, maybe I should have said a little bit at the beginning about my background. I used to be a fund manager for one of the asset managers, and my funds did well. I would pick on the simple basis of, can I buy low? Can I sell high? Do the fundamentals around us look like they point towards that particular company doing well? If you really feel that you must use your degree and your learning and you think you can apply it, then I think by all means try it. I do feel that that tends to scare away the ordinary person who should just understand that the market is simple. Buy as low as possible, and then sell at the right price. Try and not be greedy. Don't wait for it to be 100%. If at 50% you've made your money, you exit the market, you take profits, you go back and buy either the same share or you look for another share that is reasonable at that point in time if you're doing trading. If you're looking to invest into the long term, read about those companies. The ZSE has a handbook. In fact, the ZSE website by itself has literally everything you require. There's a training institute. It will train you on how to choose and sell shares and things like that. So I'm inclined myself, because I'm a personal finance enthusiast, towards people being as simple as possible. Even though I used to be an investment analyst, I feel like if you put in too much theory, you lose out money while you're still doing models. So basics for me work.
Thanks, because maybe just to round off some of the questions, I think we can then take them after, because this would then be directed to the ZSE. But I see that 3 people have raised their hands. Fadzai, can you go first? And then Sheriff next, and then Tajivinga last, so that we can then close off this session.
Hi, everyone. I've got a question. I wrote it in the chat earlier on, but I'm going to ask it. I'm a Zimbabwean citizen, but I'm not based in Zimbabwe. And I wanted to find out, especially on ZSE Direct or C-Trade, if I don't have a Zimbabwean bank account, am I able to still invest on the Zimbabwe Stock Exchange, or I have to first open a bank account and then invest from Zimbabwe?
Enmo, if you can take that question.
All right, sorry. Can you rephrase it for me, Tapio? I was on a call.
Oh, she was asking that she is not in Zimbabwe, she's a foreigner, so she wanted to know if she can then open a bank account, if she can create an account on ZSE Direct or C-Trade when she doesn't have a local bank account.
All right, so currently, unfortunately, not. And I'll explain why it may be difficult for you to open a ZSE Direct account without a local bank account. So on the market, when we opened the access to people to trade directly on us, we are also required to collect KYC when we do that. Because previously you would open a trading account with a stockbroker, and the stockbroker would be the agent that collects the KYC for us. But if we come to you directly through the ZSE Direct, because we've automated it, the way we are collecting our KYC is we are relying on what we call third-party KYC. So our reliance is that if you've got a bank account, a local bank account, you meet the standard KYC requirements that are required in this jurisdiction called Zimbabwe. So banks have got standard KYC which they use when you open a bank account. And these differ from jurisdiction to jurisdiction. So the requirements to open a bank account in Zimbabwe are not necessarily the same as the requirements for opening a bank account in South Africa. And because we are operating under Zimbabwean law, we can only work with an institution that's permitted to collect KYC in Zimbabwe. So it would help if we had a local bank account. Otherwise, without that, it becomes difficult for us to then rely that perhaps the bank where you are in collected sufficient KYC to meet the requirements for our regulators. Because if our regulators come and inspect our list of clients, they will need to be satisfied that we know the client and they meet the minimum requirements to be on the platform. Unfortunately, that will not be possible if the bank being used is a foreign bank. Assuming the regulators want to go actually and check. So if you're a local client and you have got a local bank account, the regulators could actually then go and perhaps verify with your bank in terms of the KYC, but that will be difficult if the bank that you have is a foreign bank. So that's the reason why we are unable to onboard for foreign banks at the moment, is to do with KYC requirements and the anti-money laundering guidelines that we get as operators in the financial industry. So to comply with those requirements, we can only rely on third party, but third parties that rely on local institutions and local banks for that matter. So unfortunately, at the moment, we are unable to carry foreign banks on the platform.
Can I also just add any more? In fact, I see that Mbekezeli here has just quickly also added to that. If you're a Zimbabwean national who actually comes home at some point, you can open a bank account. This is not the ZSE, it is me saying, listen, if you have an EcoCash account and it's still for some reason active, because I know when I travel, I use my EcoCash roaming outside of the country, you can fund, because the basics really are that you should have an ID, you should have a bank account, and with those, you should be able to trade on all of the platforms that have been spoken about, whether it's C-Trade or ZSE Direct, which I personally prefer, and I'll tell you why shortly. And then lastly, of course, through a stockbroker. So I know personally that there are lots of people who are outside of Zimbabwe who do have Zimbabwean bank accounts who are able to trade, who do have active EcoCash accounts who are able to transact. And you also find, because I know people tend to then say, Zimbabwe, in any territory, for me to trade in South Africa on the JSE, I have to have a South African account, because there must be a way for you to fund into buying the shares and a way for you to then receive when you sell. So this is not peculiar to Zimbabwe. In order to trade in the United States of America, the first step is I must also have a bank account in that particular. So you can basically trade in any country in the world, on any stock exchange even, provided you have the exact same basics that are asked for here. They will need your ID, they will need a bank account, and of course, all of these are both for KYC and for the transactions both ways. Let me perhaps finish by quickly treating two questions I see. Sean here was asking around why there's a minimum trade volume of such. I know any more would treat the technical side, but let me say personally, from a personal finance side, it's the equivalent of asking why people cannot be able to buy a house in Brook first. I want to say that each of us can be able to build up. That's the beauty of the stock market. You can be able to build a portfolio over time. So if I have 50,000 United States dollars, I don't start by wanting to buy a house in Brook. It won't buy me even a cottage. You know, I start allocation where I know I can be able to get two or so properties in Unit F in Chitungwiza. And then you build up. Once you combine those, you can then be able to go ahead and buy bigger properties. So Don't rush to try and buy the BATs or the Zimplaus or whatever other. I was trying to think of that, or you know, you're not Falgod, a radar. Don't try and buy a radar because you might have to work for the rest of the year to buy one share. Start, no derero padiki, no pindo kuma medtech koko, Star Africa, you pick up what you can and you build up a portfolio over time. And then another person is asking, Cynthia here was asking, you know, you're talking about buying low and selling high. And I'll tell you, and this is my last thing, why I personally prefer the ZSE Direct platform. It's cleaner for me. I train children, I train high schoolers. It's a much, much easier user experience. Some have a better experience with C-Trade, granted, but I'll tell you that for someone who's starting out, I find C-Trade much, much easier to track. But there are several features that are there that are very clear, that are easy to use. When you're putting in fact, before we even do that, we are able to look at the dashboard that just shows you the general summary of all of the shares or all of the counters. So it tells you literally, you know, what was the highest it has ever gone, what's the lowest it's trading. And for someone who is learning, listen, if I see that the highest that Delta ever went was 25 and it's currently trading at 14, without even thinking about models and analysis, and I can just say, listen, there's an opportunity for me to buy at 15. So 15 cents becomes low because it went up once to 25 cents. So you can then do the math. That's the Shona around it. So how low is low, how high is high? It depends on a specific counter. And someone will ask, where do I get that information? ZSE Direct gives you that information for free. But here's another sweet thing. When you're ready to buy or sell shares, it will tell you there's a nice market depth feature, which basically tells you, listen, you want to sell at this price, there's someone who's willing to actually buy close to that price. Then you can match easily. You want to buy at that price, someone is selling at that price. Then you can, you know, adjust your price towards whoever is selling is wanting to sell. And it can even tell you the volume. So for that reason, I find it personally extremely easy to use. And Alftin is there is asking, can mobile money wallets be used to make payments? EcoCash, yes, on ZSE Direct, you can actually onboard, you can actually fund your wallet with EcoCash. That's another reason why I use it, because it's very user-friendly for me. And then lastly, someone was asking around which broker is recommended. There are several brokers. The ZSE has a nice list on their website. Maybe this should be my concluding remark so that anyone can get into his presentation. For someone who is starting out, who I believe is most people who are in this particular webinar, if you're starting out, don't look for anything Chinoshamisira. All right. So you don't need a snake to learn how to trade on the ZSE. Go to these 3 sites, zse.co.zw, read that thing extensively. There is enough for you. Right, go on to ZSE Training Institute, do the course, it is sufficient, all right? And read the little handbook that's there. And then lastly, then go on to ZSE Direct, and you can be able to learn and trade from there. So thank you very much. I will stop here so that Mr. Taruinga can take us on.
Thank you so much, Kuzi. I can see that I think you might need a part 2 of this webinar because the questions keep coming through and people are really excited about what you've talked about. But let me take this opportunity to thank you so much for that insightful presentation. And as we said, some people are asking about the presentation. It's going to be shared. The recording is going to be shared. Allow me to introduce the next speaker, who is the Head of Business Development here at the Zimbabwe Stock Exchange, Mr. Enmo Taruinga, to take us through the second part of this webinar. Enmo, over to you.
All right, so thank you. And I had actually prepared a presentation, but perhaps we can focus steps. Do we leave the clients hanging, or I'm thinking perhaps we can schedule another one to particularly focus on the ETFs. I know it will be expensive for the clients, but I see there's a lot of interest and a lot of questions that we need to probably address in this session. I don't know what you think. I have got my presentation ready.
Okay, maybe if people are amenable, we can then extend. It was supposed to end at 11:30. If you can then just briefly tell us what you wanted to talk about, and then we leave it to the other questions that were not attended.
All right, so perhaps I'll do mine quite briefly. Part of the session was after Ms. Mbayo, and thank you so much, Kuzi, for that wonderful presentation. So there are 1 or 2 items which I actually picked from a presentation. One of it was an encouragement to build a portfolio, and that's where I'm actually going to start. We wanted to cover as well, after an introduction to investing on the stock exchange, what sort of products you can get, and she did quite touch on the equities, which is the shares, which I think everyone is familiar with. Besides the shares, we also have got fixed income, which, as you noted from a presentation, she also discouraged at the moment because the returns are really sub-inflation at the moment. I think at best, from what I heard, the return you can get from a fixed deposit is perhaps 6.5% per annum, which really is below inflation, which is in excess of 400% on an annual basis. So the other product, which is new, which you are probably the first group to actually think about it, is that we are working to introduce an exchange-traded fund. And this is one way of actually getting from the get-go building a portfolio, because an exchange-traded fund is a diversified security. So allow me to share my screen, and I'll briefly and hurriedly go through that presentation. Right, if you can confirm that you are all seeing my screen.
Yes, we can see.
All right, so ladies and gentlemen, I want to take you through a new product that will be coming on the exchange before the end of this year, and which is particularly aimed at the retail segment of the market. So the retail segment is the individual investor like you and me. So on the market, you find there are two types of investors, retail and the wholesale. The wholesale being the institutional investors, your pension funds, insurance companies, and corporates make up the bulk of the investors. But we have got a product which we think will also appeal to you as retail investors. So what is an exchange traded fund? An ETF is basically an investment entity. So the name talks of an entity, and this entity offers investors a proportionate share in a portfolio of shares or bonds, commodities or currencies or other securities. So you basically have got an institution that goes out to build a portfolio. And this portfolio can be built from your normal listed securities, which are your shares, or they can build a portfolio of bonds, or they can build a portfolio of commodities, or it can be a grouping of currencies, and then they sell out participation in that portfolio to an investor. So this is different from the normal share in the sense that when you are investing in a share, you are investing in a share for one single company. So when you're investing in shares for Delta, you are investing in Delta directly. With an ETF, what happens is that an entity, first of all, buys shares in Delta, in CBZ, in Econet, depending on the specific mandate which they want to. It can be a portfolio of 5 different securities. And after building that portfolio of 5 different securities, when you come in, you are then investing through a single investment, but you are getting exposure to a diverse underlying portfolio. And these securities are traded on the stock exchange like equity. So these you can actually buy and sell on the stock market like any equity that you already know. The other aspect that you have to know about exchange traded funds is that they are actually usually passive. So this fund, when it's constructed, what the entity simply does is it goes out to invest in those diverse securities and holds them until perpetuity. That's what you call by passive. It's not actively managed. In other words, the entity does not from time to time change the basket of the underlying securities. They simply buy the securities and hold them without any active trading taking place in the underlying securities. And just by way of illustrating, we are saying an ETF is a combination of the qualities of a share and a mutual fund. So a mutual fund is your typical unit trust. those that have invested in unit trusts, that's your typical mutual fund. So it's a fund where you pool resources, and then those resources are used to acquire specific assets. If it's a money market fund, the pooled resources are used to invest in money market. If it's an equities-based fund, the pooled resources are then used to acquire securities. So by combining qualities of a share and qualities of a mutual fund in an ETF, you get the best of both worlds in that the tradability. So unlike a unit trust, which you can only go and buy from the offerer. So let's give an example of the old mutual unity trusts. With those, you can only go and get them from old mutual. With an ETF, you can buy it in the open market on the exchange. So you are buying from a larger pool of people. So there's tradability. In other words, it's more liquid than a typical unit trust. In fact, most unit trusts will actually give you a local period to say, if you are coming into a unit trust, you have to invest for the next 6 months without you coming back to take your money out. This falls away when it's an ETF. When it comes to the market, you buy it today, come settlement T+3, you can actually sell it. So there's no local period in an ETF. The diversification which you find in a unit trust, in that the pooled resources are then used to acquire diverse securities. You also get them in an ETF because it's a basket of different securities. So it is quite diversified. So the diversification, the liquidity makes it a good product for the retail market. And because they are listed, you then add an element of regulation in that it's a product that is out there. It's on a regulated platform. So in terms of risk, it's also lower because it's on a publicly traded exchange. So those are the qualities of an ETF. Let's just delve deeper how these actually work. Let me skip these technical terms and move to how an ETF is actually created so that you can all be familiar with it. So how these are created is, first of all, you have got an entity which you call a fund originator. So let's give an example here. Let's say ABC Asset Management is the originator, and they've decided to launch an ETF. So what ABC Asset will then do is they will identify an index which they want to track. So for example, we've got various indices on the stock exchange. We've got the all share, the mining, the different subsectors, manufacturing, materials, etc., etc. So ABC Asset will pick from those indices and say, I want to build a portfolio, let's say of the ZSE top 10. So in terms of the ZSE top 10, these are classified in terms of size, the market cap. So the top 10 by market capitalization on the stock exchange becomes the portfolio, which ABC Asset identifies and says, I want to build an index. I want to build an ETF based on the ZSE top 10. So they do the identification, and then they develop the list of the securities that are in that particular index. After the identification, they then sell this idea to what we call a participant. So they can go to a big pension fund to say, we want to build a unit trust, or we want to build an ETF based on the ZSE top 10. We know you as a big pension fund, you have got these securities already in your portfolio. So the big pension fund, because they will have perhaps all the 10 securities in the proportion which this ETF originator wants, they can then enter into what we call a participation agreement, where the ABC Asset gets a delivery of the basket of securities that make up the top 10 index. And then this pension fund gets units in return for those securities. So that's the next step. If this is done, then you get the pension fund is now holding units and the originator is holding the underlying securities. The pension fund, which is holding the units, can then decide to actually sell these securities in the open market, which is on the stock exchange. And you and me as an investor can then actually participate by buying those units. Our comfort is that we know when we are buying these units, there are securities which we actually delivered that are the basis of the value of this ETF. So an ETF, in short, is a semi-derivative which you're actually introducing, because when you are buying an ETF unit, you are getting exposure to an underlying security which is lying somewhere else. Let's move and probably just illustrate how this actually happens. So this is now the secondary market. So in the secondary market, when the units are listed, you can buy the securities directly through your stockbroker or through a market maker. So another element that we are going to see as a feature that is also going to occur by virtue of us introducing this product is another player called a market maker. Let me start with the broking side. So the normal way currently which you use to buy and sell shares is still going to apply when you are buying and selling ETF units. You can place your order through a stockbroker, or you can actually come through ZSE Direct, or you can come through C-Trade. They will still give you access to that product. The other way, and which is new, is where you can actually buy and sell through a market maker. The purpose of a market maker is to provide liquidity. So in the case that the market is in short supply of these units and there's no one providing an offer for those units on the market maker will then come in to actually meet that demand gap. Or if the alternative occurs where you as an investor, you're holding the units and you want to sell, but there's no corresponding bid in the market. Instead of going to the stockbroker to say, find a buyer for me, you can go to the market maker and actually sell your units. So the market maker is going to be buying and selling on their own behalf. So whereas a broker acts on behalf of investors, the market maker acts on their behalf. So what we call principal trades. So a market maker trades on their own behalf. They are using their own money to buy, and they are using their own securities to sell. So they are coming in as a guarantee to any party. Either you want to sell or you want to buy, they're coming in to guarantee that trading will take place. If you are got units which you want to sell and there's no one in the market buying those units, you can sell them through a market maker. So this product, when it is going to be on the market, it will also come with a market maker, and the market maker is going to be made public so that any participant will be aware of whom to approach if they need to buy or if they need to sell securities, those units, and they can't find them on the open market. The settlement will still be the same. It will be on a T+3. So you buy today, you then wait 3 days for settlement to take place, which is currently what is happening. I've already explained the market maker and what they will be able to do. The transaction fees are also not changing on this product. So the normal fees that we have been exposed to on equities, which is the total of 2.4384% when you are selling, and the total of 1.6884 when you are buying, those are the fees that are going to apply. So expect no change. But we are trying to lobby. You see that we have put a note there to say Mauritius and Botswana, which have got a similar product, they've got lower transaction fees for this type of product. And we have put in our paper to the Ministry of Finance to actually request that for this product, can we have lower fees? So that would be an extra plus if we get it granted to say this product should have lower trading fees. But currently, the fees that have been incurring is going to apply on ETFs. Where do the returns come from? How do you make a profit, or how is the return made in this type of product? So because it's a basket, so in this case we are illustrating using 5 different shares. We are saying when you invest in an ETF, you are in essence investing in a diversified portfolio. So the returns are twofold. One is the normal capital gains or losses that happen, which is the movement in the unit price. And the movement in the unit price is dependent on the on the buying and selling on the market. So the forces of demand and supply will still operate. So if there are many people looking for this unit in the market and there are no sellers, the essence that the price will tend to go up. So that's the normal market forces that will determine the price for the ETF. But the other element that will also determine the valuation or the pricing for an ETF is the price or the value of the underlying securities. So in this case, this illustration is looking at the top 5. Assuming you've built a top 5 ETF, you'll see that we have got Delta in there, you've got Econet, you've got Cassava, you've got Insco and Old Mutual in that fund. The valuations of all these 5 counters will determine the ultimate valuation of this index. So if the price of Delta goes up, for example, and all the other 4 remain constant, the expectation is that the value of your ETF should go up by the proportionate increase in the value of Delta, which has gone up. If all the 5 counters go up, the expectation is that the unit price of this ETF should also go up. But if, for example, the price of Delta goes down and the others remain constant, you would also expect that the price of the unit should also go down in proportion to the decrease in the value of Delta. So in terms of returns for this product, it's twofold. One, the value of the underlying securities and how they are changing on a daily basis. And secondly, is the day-to-day demand and supply interaction on the market. Let me move on to, I'll skip these other aspects of creation and redemption and talk about what are the benefits or the advantages of this product. I've already talked about the diversification. So instead of you individually going to the market and putting a bid for Delta, for Cassava, for Econet separately, and I'll explain that that actually increases your transaction costs because there are certain fixed costs for every order. Like for example, every order that you put through on ZSE Direct, there's a $20 charge for it for settlement. So if you want to buy 5 different counters, you are already paying $100 just towards fixed costs. But when you are buying an ETF, you can buy an ETF that gives you exposure to the 5 different counters and just incur a single $20. So already you see that the element of lower cost, which is that green triangle, comes in. So there's diversification, which you get from a single investment. There's also liquidity, and we explained that with an ETF, we actually bring in a market maker as well to make sure that there's trading that can happen anytime that an investor wants. So anytime that you want to sell, you are guaranteed that if you don't find a buyer in the market, you can find a buyer in the market maker. Lower costs, I've already explained that instead of buying 5 different counters, you just buy one single unit, which gives you exposure to the 5 different counters and the transaction cost. Then there's also transparency in that the price of an ETF is published on a daily basis, which is different from unit trust. So the transparency is, it's more transparent compared to your normal unit trust, because with unit trusts, the prices are not publicly published. You only know them when you approach a single unit trust provider. But with ETF, the issuer is required to publish the daily net asset value for the ETF. You pardon me, there's some tree cutting going on outside, so there may be a bit of noise coming through. What are the risks? We also quite open. So an ETF is subject to the normal market risk, which is the movement of the price going up and down. So though it's diversified, please take note that when you invest in an ETF, it's not a risk-free security. The price of the ETF can go up and it can also go down depending on the demand and supply, also depending on the value of the underlying securities. Because they are listed securities, their prices also change on a daily basis, and that will have an impact on the unit price. So it's also subject to market risk. Then depending on the ETF as well, the strategy used. So if the ETF is tracking listed securities, it exposes you to market risk. If the ETF is tracking fixed income securities, it then exposes you to credit risk. So if it's a portfolio of loans, for example, the risk that you are facing there is people perhaps failing to repay the loans or default risk, which is the credit risk. So an ETF is basically market risk, and then what we call the investment strategy risk, which depends on the strategy used. If it's an ETF tracking listed securities, your risks are the movement, the up and down movement of prices. If it's an ETF tracking commodities, for example, like gold, you are also exposed to the underlying risks that are peculiar to gold as a metal. If it's oil, it's also then depending on the risks that are on the underlying commodity. Then, because this product is coming on the market, let me skip this strategy. There are certain elements that you will notice. With these particular issuers. So whereas an equity issuer is required to publish a profit warning statement, with an ETF issuer, if you decide to invest in it, this is an element which they are exempted. So in terms of information which issuers publish out, this is just to alert you that there's certain exemptions that apply to an ETF issuer, which when it's listed, you should not expect. So there will be no profit warning statements from ETF issuer, neither will there be publication of trading update statements, like what is currently happening with equity issuers. And there's also no requirement for them to publish interim results, neither are they required to publish quarterly or preliminary reports. So you'll only be seeing annual financial statements for this type of issuer. There's no interim publication. And they are also not required to distribute this information. They're not required to distribute the annual financial statements to security holders. They are only required to publish on their website and on the ZSE website, but they are not required to then print them and actually physically distribute them to the security holders. They are also not required to have a minimum free float. So with equities, the free float is 30%, but with an ETF, because it's an open-ended product, there's no minimum free float. The other feature which you will notice that they're also not required to publish announcements in newspapers. So unlike equity issuers, who has to publish their circulars, their trading statements, their cautionaries in the newspapers, ETF issuers are not required to do that. So those are some of the exemptions that you expect from this product. And the reason why it's exempt from all these things is because it's a very low risk product. That's why we are recommending it to the retail market. ETFs are a very low risk product, unlike your straight through equity. Because with equity, we are saying you are investing in the risks of delta operations. So if delta is affected by weather, when you invest in the equity, that risk also applies to you. But with an ETF, the risk of the underlying is limited to just the price movement of their securities, because it's a derivative, and it's a first line derivative. It's a very low risk issuer, hence the number of exemptions. I think in summary, this is what I can share on that product. Obviously, it requires more time for people to digest, but we thought we should share with you this ahead of the launch of this product. It's a product which we are working to bring before the end of this year, and it's a product which we are also recommending that individual investors can also invest in, because it comes with diversity, transparency, low risk, and a little bit more liquidity, because there's an element of market making which is compulsory for this product. Let me also end here and probably open it up to questions. So Tapia, you can, I think, take over and coordinate the question.
Okay, thanks, Enmo. Let me just go back to the previous questions we had not accommodated. Then we can then open up specific questions for the ETFs. Okay, I think there was a question from someone, I don't know where this was addressed. When is the Victoria Falls Stock Exchange coming on ZSE Direct? I assume they wanted to ask when the VFX Direct is coming.
All right, we can take that. So yes, we're actually working on the online portal for VFX Direct, but because the settlement in USD, kindly bear with us because we have to change the way our model works to facilitate nostro payments on ZSE Direct. So because of that aspect, we are looking at launching it in the first quarter of 2021. So it's not likely to come this year, but we are looking at launching it in Q1 2021. The modalities on integrating that platform with nostro accounts is the one that we are trying to work on during this course of the year. And we hope that by Q1 2021, we would have finalized. So it's definitely work in progress, and it will be coming.
Okay, and then there was, I think, if you're outside of Zimbabwe, you can open a diaspora account, Stuart Bank, or with FBC through their mobile. I think this was the suggestion for people who were asking on ZSE Direct when they were phoning us. So this is actually a suggestion that you can actually open using Stuart Bank. They've got a diaspora account. And then this one was addressed in terms of, or someone was asking, then I can't upload my KYC file. The feedback is no app can't complete this action. I'm assuming this is someone who wants to register on ZSE Direct. Kevin Era. I think we can then engage Kevin on outside this meeting so that we can then assist you on the registration process on ZSE Direct. Another question, Enmo, is how do I deposit money for the VFX? And can we use the ZSE Direct for the same market? You had already answered this one.
Yeah, so for VFX Direct, it's different from ZSE Direct. Perhaps just to emphasize that although VFX was launched by ZSE, it's actually a standalone exchange. So that's why we are creating VFX Direct as opposed to ZSE Direct for it. It will be riding on the same platform, but it will have different processes for VFX because you have to use USD nostrils on the other exchange. Then I'm also seeing a question with private companies. I think this relates to ETFs. Yes, so they are open to creation by anyone. What we simply look at is in terms of your experience in managing funds. So you just have to prove to us that you've got the competence to actually manage a fund, and we can actually permit you to launch your own ETF on the market. So that's quite open to any issuer. Your competence only is what is required. What is the difference between a market maker and a specialist? So specialist depends on where it's used. I would take it's perhaps to a specific activity. A market maker is a general liquidity provider in a particular security. But I would need probably to know, because in our market we don't use the term specialist. We don't have specialists. We only have got a stockbroker, and we have got a market maker. But perhaps in other markets they could be meaning something. But my understanding is that a market maker is a liquidity provider, and a specialist from the general English term, I would think is someone that's really specializing in a particular area. It may not be liquidity provision. Perhaps they are specializing in a certain security, but perhaps you can shed more light on that. Who will make up the market makers category? Can private registered players become market makers? Yes, so market making is also open. The requirement there is just the depth of your pockets, because we require a certain capital to be in liquid form for us to then be guaranteed that if a big trade comes through, you are able to meet the other side. So market making is open to everyone. And if you go on the website, the rules on how you can become a market maker actually available. It's only the level of your liquidity that we'll look at, and obviously the competence that play that role, but otherwise it's open to everyone. How do you participate in ETFs? Which institutions provide this service? What are the minimum requirements to invest? So, like I said, it's a product that is due to come on board, but in terms of how you invest it, once it's launched, you still get it through ZSE Direct or through the stockbroker. It's a matter of just calling a broker to say, can you buy me the ETF? Or actually logging on your ZSE Direct account and selecting the ETF, it will be available through that platform. Or even the C-Trade will still also be available. The minimum at the moment on ZSE Direct is $500 worth, so that will still apply. If you go through a stockbroker, the minimum then depends on what the stockbroker requires. So the minimums with the stockbrokers differ. It differs from one stockbroker to the other, but through ZSE Direct, the minimum investment threshold is 500 or a minimum of 100 units. And I think just to take, I think someone had asked why we put the minimum of 100. So our market trade in lots, we have got what we call a normal lot, which is a multiple of 100. So that's the normal lot on a market. Odd lots, which are below 100, unfortunately, we could not automate that because they trade on different platforms. We only automated our ZSE Direct to the normal trading board, which is the regular board on the ATS. We did not automate it to link with the odd lot trading functionality. That's why at the moment it's only able to handle the 100 because that's the normal lot for any market. The odd lots, currently that path, we have not automated that path because it will need to be configured to a different trading engine within our ATS for it to be able to take odd lots. So currently, our ZSE Direct is only linked to the regular board, which trades in lots of 100. So if you put in an odd lot, it won't be able to go through because it's not connected to the odd lot, which is a different matching engine in our ATS. Update on the, okay, just clarify on ETFs, are they likely NASDAQ and SP 500 or they're different? All right, so the ETF that we are bringing on board is a local created one. It is made up of local securities. The NASDAQ and SP 500 one, we are hoping those ones will come on the VFX, which is trading in USD, because for you to build an ETF on foreign securities, you would need foreign currency for it. So because on ZSE we are trading in local currency, the local ETF that we are bringing is on local securities, so not on the NASDAQ or the SP 500. Update on Old Mutual. This one, I will say perhaps I will not, I don't have any update because it's a listed company which is under suspension. From an exchange perspective, we cannot give an update. It's really on the issuer themselves to be providing updates at the moment. But we take note, you have said you are an investor in that counter and you are really in the dark of what is really happening. What we'll do is probably to encourage our issuer regulation to ensure that perhaps the issuer publishes a statement with regards to their listing status. I can simply say that it's currently listed on the ZSE, but it's under suspension from trading. Tapio, I don't know if you've got any other questions.
No, I think from the chat, we've covered almost all the questions. If there's anyone that has a question on Enmo's presentation, I think we can just give it 2 minutes. You are able to unmute your mic and actually ask Enmo any questions that we might not have dealt with. I see, Altfin, you have unmuted yourself. Do you have a question?
Hello?
Yes, we can hear you. Go ahead.
Okay, that's fine. Okay. I think there's just one thing that has been left here. I think maybe the team are not seen it.
Sorry, Alton, your sound is very poor. I don't think Enmo can hear you. Are you able to maybe speak up a bit?
Can you put it in the comment section?
Okay, yes, you can. Is there anyone else who's got a question, whilst we wait for Alvin Mark's question so that we can round up? Okay, so let me take this. Yes,
Hello.
Go ahead, Richard.
Hi. So I just had a question regarding the, from my understanding, the all-share index it tracks the activity of all the shares listed on the ZSE. Would that be correct?
Yes, that's correct. It tracks the performance of all the listed counters.
So would it also be correct to then imply or infer to say that the all-share index measures the country's performance?
It does, in a way. It's the proxy for the, we would say, the market performance. That would be correct. That's the proxy you would use.
Okay, thank you.
Okay. There's a technical question on whether there's a platform that provides charting software like MT for TradingView with candlesticks. Not at the moment. I would say probably we may not have local coders that can develop something like that. For us, the platform that we have created, ZSE Direct, is really meant for it to be a basic trading platform. So it doesn't have the technical analysis bit. But I think it's a field which is open to anyone with technology. They can actually build that and perhaps charge some service fee for it and sell it like what Bloomberg does. But I don't think I've seen one for local markets. No, not at the moment.
Okay, I think we've got one last question. Can you see it in the comment section, Enmo?
Yes, regarding the holdings reports, as we no longer have physical share certificates, how do investors get hold of these in soft copy form? The CSD or the stockbroker not providing them. I will have to find out. It depends if your shares were dematerialized, and because currently we have got a dual share register, one which is in electronic form and one which is in for physical. But the ultimate share register sits with the transfer secretary. They are the ones with the responsibility of giving you a statement of your holdings. So it depends with the company that you have invested in. I'll give you an example. Old Mutual, though it's suspended, their transfer secretary is COPSAFE. So if you go to COPSAFE with your ID and say I'm a shareholder, I need a report on my holdings, they can actually give you that report. But there are 3 transfer secretaries. We have got ZB and First Transfer. So it's a matter of knowing the shares that we have got, or we can simply go to the transfer secretaries and actually say, I'm just checking. I need, this is my ID, because they can check my ID. I think I've got shares somewhere. They've got a record of all the shareholders for the listed companies. So the CSD, because it doesn't deal directly with the individuals, perhaps that's why. Then with the stockbrokers, it then depends on whether you actually bought the securities through that particular broker. If you bought the shares through that particular broker, they should be able to give you a statement. With that one, if they're refusing, you can actually file a complaint with us that I bought my shares through this broker, but they are failing to give me a report on my holdings. But if the broker is different from the broker you used to buy the securities, then they may have a challenge in accessing those reports. But where you can get your shareholding records directly is through the transfer secretaries. If you know the company that you invested in and their transfer secretary, you can actually go directly to the transfer secretary. They should be able to provide you that report.
Okay, thanks, Inmo, for that clarification. Allow me to take this opportunity to thank our earlier presenter, Ms. Kuzaimbayo. I don't know if she's still with us. And also to thank Mr. Inmo Tarivinga for his presentation on the ETFs. And I would like to also thank all the participants that joined this webinar. We really appreciate you taking your time to come through, and also your support on all the webinars that that we hold as the Zimbabwe Stock Exchange. I'm sure most of you have we have your emails, so we will be sending through the presentation on email to all participants. Thank you very much once again, and enjoy the rest of your day.
Thank you.